South Africa Market Update, the 4th of July 2026. South African markets head into the weekend on a firmer footing, with the rand benefiting from weaker than expected U.S. employment data. The local currency strengthened to around R16.23 against the US dollar after softer jobs figures reduced expectations of an immediate U.S. Federal Reserve interest rate hike, improving sentiment toward emerging markets. On the JSE, the TOP 40 index closed 1.1% higher, while the benchmark 2035 government bond also strengthened, with its yield easing 4.5 basis points to 8.22%. There was also encouraging news on the domestic economic front. South Africa climbed 10 places in the 2026 World Competitiveness Yearbook, improving from 64th to 54th, supported by modest gains in business confidence and government efficiency. The improvement comes on the back of StatsSA's first quarter GDP figures, which showed the economy expanding by 0.5%. While growth remains modest, it marks the sixth consecutive quarter of positive economic expansion, with finance, mining, and agriculture continuing to provide the strongest support. Government also took another step toward strengthening the country's long-term resilience. The Department of Mineral Resources and Energy released a draft strategic petroleum stocks policy, proposing that the South African National Petroleum Company gradually build strategic crude oil and refined fuel reserves equivalent to 60 days of net imports, with a longer-term target of 90 days. The aim is to reduce South Africa's vulnerability to global oil supply disruptions and price shocks. Investor confidence was further reflected in the tourism sector, where the R2.1 billion Club Med South Africa and Vikla Safari Lodge development officially opened today. The project represents one of the country's largest recent hospitality investments and was financed with support from major local institutions, including ABSA, African Bank, and the Industrial Development Corporation (IDC), highlighting continued private sector confidence in South Africa's tourism potential. However, fiscal concerns remain, particularly in Johannesburg. The city entered its new financial year facing a R2.1 billion unfunded budget gap after National Treasury questioned its revenue projections. The broader budget shortfall now stands at approximately R7 billion, while Finance Minister Enoch Godongwana has warned that R8 billion in national funding could be withheld amid ongoing disputes over a contested R10.3 billion municipal wage agreement. Business leaders continue to express concern that prolonged uncertainty could place additional strain on infrastructure, service delivery, and investment in the country's economic hub. Looking ahead, attention will shift to the Public Economics Conference, co-hosted by National Treasury and SARS from Tuesday the 7th of July. Discussions will focus on how government can use more detailed public sector data to address South Africa's structural youth unemployment rate, currently 32.7%, while exploring how digital transformation is reshaping the country's labor market and informing future economic policy.